So we're back with you on the program. Let's get the conversation going around the oil and gas segment. The big seven on the markets contributed about 3.45% to the rally that we saw last week at the Nigerian market space. So let's hand this over to Chimeze Obiwagu in Lagos to talk us through the numbers and, of course, bring us up to speed on the energy market, how much the oil market will have impact on equities, on fixed income space. And we have an analyst sitting down there in the studio in Lagos. Chimeze, over to you.
Thank you very much, Bosun. Well, we'll begin with the stocks in the oil and gas sector of the Nigerian stock market. The index gained about 2.95% in the week on the review, all thanks to interest in Oando and Seplat. Now, looking at the numbers, closing numbers for Friday, all the stocks were unchanged, but for Oando, which gained by 4.98% to close at 7 naira. 17 kobo there. And one issue that has become a concern for oil-producing countries like Nigeria is the trend in oil prices. That commodity is the third week in a row, closing at $46 per barrel on Friday, their longest losing streak since November. However, the prices rose today as Saudi Arabia's energy minister said an OPEC-led production cut scheduled to end in June would likely be extended to cover all of 2017, although a relentless increase in U.S. drilling capped gains. Analysts say the sharp drop in the price of oil in the international market poses a threat to the gains made so far in the Nigerian forex market and, of course, the equities market. Let's talk to Omotola Abimbola, Senior Investment Analyst at Afri Invest, on this particular issue. Good morning, Omotola. Thank you very much for joining us.
Good morning.
Now, were you surprised when you saw the oil price tilting towards the $46 last week?
It was a bit surprising. Like you mentioned, we've had an OPEC/non-oil OPEC production cap since last year, and despite very strict compliance, from what we've seen in the markets, we've seen the compliance in the region of 90%. So despite this, we are still seeing a beating in crude oil prices, which took the WTI high to less than $46 per barrel last week, and even the Brent closed below $46 per barrel. But we can attribute this bearish trend to three factors. Number one, we saw Libya's biggest oil field, the Shahara field, resuming production last week. So that took Libya's production numbers to above 700,000 barrels per day, from less than 600,000 barrels per day that we saw over the last couple of months. And this poses a threat to oil supply as well. The second factor is that we are now seeing OPEC members competing more with prices rather than volume. Don't forget, we already have a production cost agreement, but due to the threat to market share of some major producers, they are now cutting their prices to their major customers. For instance, Saudi Arabia last week, they cut their prices to their Asian consumers by about 50 to 80 cents on the barrel. So that also led to the bearish trend in the market. And the biggest factor, of course, is the shale guys operating in the US. For the second straight week, we have seen inventory numbers, falling lesser than analysts' expectation. Last week, the IEA came out and said crude oil inventories in the US fell by 900,000 barrels, and compared to 3 million barrels analysts expected. And of course, it's not so surprising. Increasingly, the shale producers are becoming much more resilient and much more efficient. They're finding it very efficient and very profitable as well to produce at $50 per barrel oil. Most have cut their drilling costs and have hedged their production in the futures market over a period of 1 to 2 years. So that took oil production in the US to 9.3 million barrels per day last week, which was the highest in over 2 years, I think, since 2015.
Now, in all of this, looking at the trend in oil price now, correct, what will that mean for the Nigerian market? Look at the equities, look at the currencies.
Well, fortunately enough for Nigeria, this decline in crude oil prices is coming at a time when we are having our production numbers going up. So you might not see the immediate impacts of that kicking in, at least over the next 3 or so months, But If we see OPEC and non-OPEC members, coming to the table again to sit and extending the oil cost agreements, there may be some respite for oil prices. And even if you look at oil futures at the moment, if you look at the futures curve, you see a strong contango.
Just like what happened this morning, I mean, with the statement made by the Saudi Arabia minister.
Yeah. And that's what reflects in the futures market. If you look at 12 to 9 months futures prices, they're a bit higher than the spot price we have today. So the outlook is not so bullish, but neither is it bearish as well. I think what we might probably see is a stability within the region of $2 per barrel or so.
Now, looking at the equities now, we have some of these stocks listed in the oil and gas sector. We have Seplat, we have Oando, that do the upstream sector, actually. Looking at their stocks now and comparing what we have, the oil trend right now, would you say that's what is driving what we're seeing on their stock? Because particularly Oando seem to be doing very well now.
Right. Don't forget what I said initially, that this decline in oil prices is coming at a very sweet period for Nigeria, when we were having our production numbers going up. The Bonga field resumed production last week, so that took us up to around 2 million barrels per day. Forcados terminal should be opened by the end of this month as well. And that's why you saw that rally in Oando. Most of Nigeria's indigenous upstream companies, most of them, operate, they operate onshore. Right, they pay the marginal fees onshore, and they require the Forcados terminal to take their production volumes out. So if Forcados come back on stream, that is positive for these companies, despite the decline in oil prices. So you might not see the impacts of these weaker oil prices immediately on the oil majors seated on the Nigerian bourse.
Now, talking about Nigeria's oil production, where exactly are we? NNPC says we have hit the 2 million barrels per day. OPEC is saying 1.